Hello everyone and welcome to Momentum channel. My name is Mo, and in this video, as part of another investing in the stock market video review on Momentum Finance channel, we are going to take a look at a Canadian stock, a Canadian penny stock that has just released its latest quarterly earnings report and actually has really done very well by increasing its revenue by over 200%. That's quite impressive. We're going to take a look at this company and its latest quarterly earnings report. We'll also take a look at the company's stocks and analyze the stocks based on the different fundamentals and financial metrics and why we are currently investing in this company. It is considered to be an undervalued Canadian stocks that, by the way, is also traded for other investors who are outside of Canada through either Frankfurt Stock Exchange, FSE, as well as through over-the-counter in US dollars. So if that's something that interests you, be sure to watch this video until the end, and I'll find out why we are investing in this company and adding to our existing shares at this time. So the company that we'd like to review is called Greenlane Renewables. Greenlane Renewables is a leading global provider of biogas upgrading systems that are helping decarbonize natural gas. You notice here on the screen, they have just announced their second quarter of 2021 financial results. And as a result of that, some of the highlights include a record revenue of $12.6 million in the quarter. It shows an increase of 200% over the $4.2 million reported in the second quarter of the year before, 2020. And they also reported a gross profit of $2.9 million and a gross margin of $3.2 million, which is about 26% of their revenue. They did, however, report a net loss of $1.1 million, or about 1 cent per share, which if you compare it to that of the similar quarter in the year before, it is higher than that. Back then, it was hovering around a loss of roughly around $900,000. So slightly more net loss. However, in a few moments, we will walk you through analysts' forecasts and how according to analysts' forecasts, the company is projected to actually get to that positive, territory and have some positive net income. But we're going to get to that. Looking in terms of how the company is projected to do and some of their sales pipelines as well as sales order backlog, you notice here that the company has a sales order backlog of $41.9 million as of end of June. They also have a sales pipeline value at over $800 million as of June 30th, 2021. And the sales order backlogs essentially is based on the contracts the company earns and gains. And as those contracts are delivered and the projects are fulfilled, the value of those sales orders are going to decrease. But as the company signs new contracts, the value of the sales order backlog is going to increase, because then the company is expected to work on those contracts and deliver those. That's how that number comes. But when it comes to the sales pipeline, it is defined as the qualified prospective projects that could convert potentially into orders within approximately 24 months time frame. But not all of these potential projects, of course, will proceed within the expected time frame, and that's why you have to take that with a little bit of caution. Nonetheless, it does give you an expectation of what the companies potentially could do or pursue. When it comes to the rest of the report, if you look at it, the company has announced that they have recently won new contracts totaling $16 million in the quarter for the supply of biogas upgrading system for a wastewater treatment plant and first commercial scale project in Colombia, the 19th country that the Greenlane has sold their upgrading equipment into. And a project also in Spain, and a large landfill gas to renewable natural gas project in the United States. And subsequent to June 30th quarterly earnings, the company has recently as well announced new biogas upgrading system supply contract totaling $12.8 million for the 3 more projects in the US. And this is about this news article that was recent news release actually was provided by the company most recently, whereby Greenlane Renewables has signed $12.8 million worth of contract in biogas upgrading system supply for renewable natural gas projects in the US. So the company is definitely doing well in terms of signing new contracts, as you saw in different countries, and even the values of these contracts are considerable and definitely adding to their company's revenue. And you can expect in their next quarter earnings, potentially these would be reflected, especially this last one. Of note here is that the company Greenlane is traded on Toronto Stock Exchange with ticker symbol GRN, but as I indicated, it is also available on Frankfurt Stock Exchange with ticker symbol 52G, as well as it is available in the over the market with ticker symbol GRNWF. So that might be of interest for those of you who are interested to invest in this company from outside of Canada. As a result of this, news release and the quarterly earnings, Brad Douville, the president and CEO of Greenlane, has indicated that we continue to concentrate on successfully executing our business plan while experiencing rapid growth and generating a fourth consecutive record revenue quarter for the company. With our multi-technology approach that enables us to offer compelling biogas upgrading systems, combined with our relentless focus on the global renewable natural gas market, we have positioned Greenlane as the go-to industry partner for upgrading any biogas anywhere for any project size or type. In addition to our core system supply business, as Brad indicates, we will pursue opportunities to deploy development capital to help accelerate projects that use more Greenlane systems, and also explore acquisition opportunities that can broaden our market reach and expand our intellectual property portfolio. From a profitability standpoint, over the last 18 months, our quarterly revenue growth rate has been 3.4 times greater than the quarterly growth rate in operating expense. So they are definitely doing better when it comes to expanding their the pace of their revenue growth versus the pace of their increase in their operating expense. So that's always good. You want to see that divergence there. As a result, generating positive adjusted EBITDA starting in Q4 of 2020. And this leverage effect highlights the strengths of their and the asset light business model, which expects to see continuing as the top line growth. With that, let us take a quick look at Simply Wall Street and closer look at the stock for Greenlane Renewables, some of the fundamentals of it, and how the company and its financials look like. You'd see here that with Greenlane Renewables, some of the positives is the fact that they're trading at 58.7% below their estimated fair valuation. We're going to take a close look at that in a moment, but this is based on analyst estimates covering the stock here on Simply Wall Street. Also, the earnings for the company is forecasted to grow 53.49% per year, which is just incredible. And the revenue grew also by 163.6% over the past year. And as we saw in their latest quarterly earnings as well, 200% in the last quarter compared to similar quarter in the year before. So that's just remarkable. Some risk that you have to be aware of is the fact that the shares are being diluted in the past year. And also there have been some significant insider selling over the past 3 months. And we'll take a close look at that. If we continue, the past return, the most return for the stock, the 7-day return, the stock is showing a positive 15.8%. And the 1-year return for the stock is showing a massive 314% return, which is just incredible. Looking at the 90-day return, it's showing 9.3%, and the 30-day is showing to be 26.6%. In terms of the valuation, the company is showing to be more than 50% undervalued based on the analyst forecast, with analysts estimating an average fair value of $4.43. And this stock at the price that it's last traded, this being at $1.76, is showing to be about 60% undervalued, according to the analyst estimates. All right. If we continue and take a look at some other metrics, for example, if you look at the price to book ratio for the company, it is at 4.5 times the book value. Whereas if you compare that to the industry, in this case, it's gas and oil is the industry that is being used for comparison purposes on Simply Wall Street. For the gas and oil, the industry is showing at 1.6 multiple as an average. In terms of future growth, as we talked about, is forecasted to have annual earnings growth of 53.5%. When it comes to financials, we're going to take a look at some other metrics. You see here, the estimate is that the earnings per share, or EPS, is starting to turn positives from the year 2022. So starting next year, the expectation is that the earnings is starting to gradually get into the positive territory. That's very promising. And similarly, if you look at the projection when it comes to other metrics, for example, for revenue, the revenue is projected to continue to grow for the company as well. Looking at the company financial metrics, let us take a look at their assets in terms of the balance sheet. If you look at their assets at $50 million plus, it's well over their liabilities of 14.1. We're talking about short term. So these are short term assets well over their short term liabilities. Longer term, their long-term assets is also well over their long-term liabilities. You see about $18.6 million long-term assets compared to only $400,000 long-term liabilities. So that's again very, very positive. They get a good pass mark for us there. We talked a little bit about the concerns with the insider trading. So let's take a look at that. You notice here most recently, there have been, especially in the past 3 months and the past 6 months, there have been several incidents of shares being sold. However, in the 6 months to 12 months, you see also numerous cases of insider buying. This, of course, can be a little bit of red flag. Ideally, you don't want to see insiders selling their shares, but it is bound to happen. Obviously, even for the individual owners and the directors of the company, or because the executives, they are bound to sell their shares at certain times and just trim some of their profits. Same approach as we do as investors. We obviously decide when to buy or sell. This could happen, although it's not ideal for investors to see that, but it could definitely happen. When it comes to ownership breakdown, this company is definitely least kind of recognized by institutional investors, which could be positive in a sense that the company is still fairly new. It's not been quite discovered or chosen to be invested by institutions, but can really provide a lot of opportunities for general public. And if the company can grow, at one point, it could possibly be picked up by larger institutions. And at that time, usually if ever that happens, that really can catalyze the growth of the stock price. But it's not a guarantee. Something though that could happen if they continues to do well when it comes to both increasing their revenue and hopefully in terms of their earnings as well. At this time, as I mentioned, about 75% of the owners of the shares are general public and only about 11% are institutions. The individual insiders also own about 10% of the shares. You look at the top shareholders for the company, including some companies and some of the individual insiders. You see, for example, Brad Doyle or Wade here. And if you look at the change in terms of their shares compared to the last two, between this report and the last two reporting dates, how the change in their stock ownership has changed. For the most part, everything seems very positive. For example, for this FMR company, it is actually more than doubled. So that's quite promising how many shares now they have, current value of their holdings. And this is in fact the largest ownership with 6.12%. For a company that has been established long ago, in fact in 1986, and active in the green energy sector and green energy field, this is the company that actually has a lot to offer. They are truly one of the global leaders in the world when it comes to that field. We had made a video on this channel recently talking about this company in more details and going into specifically what type of products they offer and where they are present. If you haven't checked that video, be sure to check it out and let us know what you think. Are you invested currently in Greenlane Renewables or any other stock active in the green energy field? let us know in the comment section down below, and we'd love to hear from you. By the way, if you enjoyed this video, please don't forget to give this video a thumbs up and share it with someone who might benefit from the video. And of course, don't forget to subscribe to Momentum channel. Here on Momentum Finance, we post every week several videos about investing in the stock market, investing in other avenues, as well as financial freedom. With that, thank you so much, and we hope to see you next time.